Hello and welcome. Today I have Mr. Tom Fletcher here with us. Thanks, Tom, for joining us, man. How are you?
I'm great. Thanks, Alex.
If you haven't been part of this before, Tom and I are going to sit here and just talk a little bit about the broad topics, really driving some of the markets these days. And as of right at this moment, it's just checking the date. It's July 7th, right around midday. And we want to timestamp it just because so much can change. And especially Tom Fletch feels more so now than ever. But let's just jump right into it. Fletch, what do you see in the markets these days?
Hey, thanks for the intro again, Alex, as always. And thanks everyone for joining us again for another one of these updates. Well, just taking a look back, a lot has taken place over the past several weeks. But if you weren't necessarily paying attention, it might have felt pretty quiet. But a couple of events stood out for me. Number one, we had the largest initial public offering in history. Elon Musk became the world's first trillionaire, and we lost a legend. Alan Greenspan, who ran the Fed for over 18 years, passed away at the age of 100 years old. As a trader during his tenure, I spent quite a bit of time trying to decipher his Fed speak, which was always interesting. So may he rest in peace. He was, again, a real legend. On top of all that, the drama out of the Middle East, which has been dominating headlines for months now, is starting to finally cool off, with the U.S. and Iran signing a ceasefire agreement, memorandum of understanding, and that included reopening the Strait of Hormuz. So as a result, the market's attention is now shifted away from war headlines and now really is focusing on three key areas. There's interest rates, AI spending, and whether investors still have an appetite for new stock deals. And let's start with that IPO, because it really was historic. SpaceX went public with a $75 billion offering, which was the largest IPO ever. And to give you some perspective of the size of that deal, it was roughly 3 times larger than Saudi Aramco's record-setting 2019 offering. And that, despite concerns that SpaceX's shares were overvalued, the deal was well oversubscribed and priced at $135 a share, opened at $150, and is currently trading slightly above that level at the time we're filming this. Excuse me. Now, that may not sound all that thrilling on its own, but here's the important thing. The stock market absorbed a $75 billion stock offering without a major disruption. And if SpaceX had flopped, it could have made investors potentially more cautious about participating in future deals. And that's important because several other huge IPOs are expected to come to market later this year. AI companies OpenAI and Anthropic are expected each raise $60 billion in the fall, allegedly. And later this week, Korean chip maker SK Hynix is expected to raise $29 billion. So again, these are massive deals. So the flip side of this, so the other side of the coin, is that at the end of the day, markets do trade on the principle of supply and demand. So the question is, with all the supply out there, particularly in tech, will this potentially sap liquidity and investor demand later this year? For the time being, it doesn't look like it, but we'll have to wait and see how things shake out.
Yep.
Now, onto AI, because it still continues to drive stock market headlines and markets for that matter. AI spending continues to show no real signs of slowing down, but you're starting to see more chatter about pricing and competition lately. And you're also starting to see cheaper AI models gaining ground, including Chinese models. Large enterprise customers are starting to push back on what they're paying for AI usage. Frankly, that's not particularly unusual. It's what can often happen when a new industry matures. But if that trend continues, it could start to squeeze revenues and margins for these companies that continue to spend heavily on infrastructure. And there's also another side effect that wasn't receiving much attention until recently. AI demand has created memory chip and storage shortages, and that's driven memory prices through the roof. As a result, companies such as Apple have started to raise prices in some of their products. So net AI is currently a mixed bag for inflation. And while it has the potential to boost productivity over time and lower wage inflation, it's also driving some consumer prices higher. And then one other point we'd like to make is about the Fed. And this is probably the biggest shift we've seen over the past few weeks. Coming into the year, markets expected the Fed to cut rates once or twice by year end. Now, with inflation still running above the Fed's 2% target and a surprisingly hawkish tone coming from newly appointed Fed Chair Kevin Warsh after the Fed's latest June meeting, markets have gone from expecting rate cuts to now pricing in the possibility of at least a rate hike instead, maybe two. And that was last week's movement in the Fed fund futures. And that's a potentially meaningful change in Fed policy, and it's something markets will be closely watching.
Yep.
Now, there's some good news on the inflation front, however. With the Middle East conflict winding down, allegedly, the Strait of Hormuz reopening, and Iran expected now to sell oil more freely, Brent crude prices have dropped from wartime highs above $120 to now around $70 a barrel at the time we're filming this. That's pretty close to levels where oil was before the conflict began. It'll take time for the region's infrastructure and shipping to fully normalize, but if supply keeps building, we could actually see the possibility of an oil surplus down the road, which would push prices even lower. And that matters because falling energy costs are good for consumers. And if that trend continues, this could give the Fed more policy flexibility than markets are currently pricing in.
Yeah, wow. There's a lot to digest, Fletch. Thank you so much for that. We're really at halftime, right? Middle of the year through the first two quarters. We have 2 quarters left to go. So with all that, what do you think the market's going to focus on the second half of the year?
Well, I think there's, again, some familiar themes here. Well, earnings growth, as we've been saying for some time now, has been exceptional, particularly in tech and AI. With expectations so high, markets will be watching for any hints of decelerating growth. And you're going to start to see second quarter earnings begin meaningfully reporting next week. Excuse me. Likewise, and relatedly, markets will also be focusing on the sustainability of AI spending. Since AI is such an important driver of markets and earnings, any signs of a spending slowdown would likely be a red flag for the markets. Now, looking at prices at the time of this filming, chip stocks are weak today and have also shown weakness over the past handful of days. But for some perspective on that, the SOX semiconductor index, which we talked about before, is still up about 75% in just 3 months. So my point being, with prices where they are today, there are some pretty high expectations for these stocks. And again, any sign of disappointment is likely to come with some volatility.
Yep.
Now, outside of tech and semis and AI, as I mentioned earlier, the direction of interest rates will be closely monitored. Investor appetite for these upcoming humongous equity offerings, and a couple other points worth mentioning. From a geopolitical standpoint, even though the situation in Iran seems to be calming down, on the other hand, the war in the Ukraine seems to be heating up. That has the potential to impact Europe's economy and the energy sector as well. And another point that hasn't received much attention, but likely will be in the months ahead, is the outlook heading into the midterm elections and which party will control the House and the Senate. So just briefly in closing, we'd say that overall we still remain constructive on the market based on the current economic backdrop and strong earnings outlook. But we wouldn't be terribly surprised if we saw a pullback in prices given the move we've had since late March.
Yeah.
Thanks.
Well, Fletch, unbelievable information. If anyone wants to speak in further detail with Tom, because again, this is pretty high level stuff, reach out to Tom, reach out to me, anybody on the planning team. All this is important as it relates to your personal financial plan. And ultimately, that's going to guide any of the decisions. So reach out to one of your planners if need be. Again, I'm Alex Weiss, president here at Napier Financial. Tom Fletcher, chief investment officer here. Thank you for your time. We appreciate your partnership, and we look forward to talking with you next month.
Thanks.
Take care, everybody.